Good morning, everyone. My name is J.C. Meyer. I'm the operations manager for Sunbelt Business Advisors of the Greater Bay Area, office located here in Sunnyvale, but we service the entire Greater Bay Area. And welcome to our webinar presentation on preparing to sell your business in the COVID-19 era. It's going to be hosted by our broker and principal, Helen Liu, and also by one of our senior agents, Jordan Zwigorn. And with that, Helen, take it away.
Thank you, JC. Good morning, everyone. Welcome to our webinar. So this one, we're going to focus on preparing to sell your business in the COVID-19 era. And we also want to probably present a series of webinars on topics that will be interested by both sellers and buyers in the Bay Area. So if any of the audience, you have any question or specific topic you want to discuss, please feel free to let us know. Then we'll have the right expert or our agent to present those kind of topics to you. So with that, I'll have a brief introduction about our office. So you have met JC. JC is our backbone guy, always in the office answering phone calls. So you probably have talked to JC at one point or the other. So Jordan is one of our senior advisors. He will be presenting this webinar to you. And about the office, so Sunbelt is one of the largest, actually is the largest brokerage in the world and has 150 locations worldwide. So this office in Santa Clara County has been serving the Bay Area for over 20 years. And we also do other regions, just beyond the Bay Area. We provide valuations. We provide Main Street and both larger M&A deals. And most of our agents are, previous business owners. So they're now just somebody fresh off the college, with no business experience. So for that reason, we can provide more value-added service to our clients. So with that, I'll turn the table to Jordan.
Hey, good morning, everyone. I'd like to thank you for joining us at the start of what looks like a long and also a hot Labor Day weekend. Before we start discussing the preparing to sell your business, I actually wanted to just jump right in and give you a little update on the current market condition for business sales now that COVID has been with us long enough to draw some valuable statistics. So bear with me a second. All right, here we go. So BizBuySell, the website for business sales, they publish quarterly data on business sales. And the quarter ending June 2020 is an important one since it's the first full quarter of results since the start of the pandemic. So in the slide above, you can see the initial impact of the economic shutdown and how the effect that it's had on business acquisitions. During this time, sellers were in reactive mode, adapting to COVID and creating new approaches to generate revenues. And during this time, buyers were taking a wait-and-see approach. And so as a result, in the month of April, there was a 51% year-over-year drop in business sales transactions. And that big drop in April led to a 39% overall decrease in the second quarter of 2020. So pretty significant drop-off in business sales at the start of the pandemic. Actually represents the largest year-over-year decline of business sales since the second quarter of 2009. In this time period, in our own firm, we did see some deals closing in spite of the pandemic. However, I should say that some of those deals did encounter some discounted pricing in the 11th hour. And that was partly due to lowered revenue projections on the part of the sellers, and also reflecting some increased risk of the unknown for buyers. So while April was a challenging month, in May and June, sales of businesses did rebound. And so in the slide above, you can see that in May and also in June, in each of those months, there was a consecutive 12-point gain in year-over-year transaction deficit. So that deficit reduced to 39% in June, or in May, and 27% in June. So things were definitely improving as compared to April. And in that May and June timeframe, about 71% of owners resumed revenue-generating activities, and lenders began to resume SBA loan approvals. And surprisingly, the web traffic from interested buyers came back even stronger than pre-pandemic levels. So speaking of buyers, you can see that the buyer web traffic to Biz Buy Sell and other related business listing sites decreased significantly at the start of the economic shutdown, but then it rebounded almost immediately after. At Sunbelt, we monitor the web traffic of our own business listings. Similarly, we noted that the buyer activity and interest is strong in spite of the ongoing pandemic. So let's look at what kind of businesses are actually selling. Buyers are drawn to businesses that are essential, in full operation, and generating revenue through the pandemic. Some industries were affected harder than others. For example, within the business services sector, property management companies are still collecting rents by and large. But let's say you're an event management company and you're trying to do physical events in an online world. And if you're in a business like that, you're probably struggling to reinvent yourself around online events. And if you use these two examples, the property management company will likely sell at a higher multiple with more interested buyers as compared to the event management company. Even within individual industries, there's a lot of different ways of how things might be valued. For example, in the restaurant industry, those with takeout and delivery services, and especially those with the ability to seat ample customers with outdoor dining, have fared better than full-service indoor restaurants from a valuation standpoint. Okay, so switching gears a little bit, the slide above shows visitor data from Yelp across several industry categories from March 1st to June 8th. It's interesting to see what kind of categories consumers were searching for on Yelp versus those that have floundered. So at the beginning of the pandemic, you can see that things like guns and ammo and bicycle rentals were clear winners at the start of the pandemic. And you may not be surprised to see that things like wineries, hair salons, and party rental stores were suffering. Yeah, it's good to take a look at these things and understand, you know, how different industries are reacting to the pandemic. You might be surprised to see that for high-performing essential businesses, sellers actually have the edge at the negotiating table. In the above chart, you can see that the average asking price is in black, along with the average selling price of businesses over the past several years. And if you look at the second quarter of this year, you can see that on average, small businesses across the board had an average asking price of $300,000 and an average selling price of roughly $286,000. And this is averaged across the board. So what that means is buyers at large only managed to negotiate a 5% discount from the asking price on average. And if you compare that to the second quarter of last year, buyers on average were negotiating even more significant discounts, even before there was a pandemic. So that's kind of interesting information. So with so much risk and so many unknowns, you might wonder why buyers would consider acquiring a business during a pandemic. Biz Buy Sell wondered the same thing, so they conducted a buyer survey. And what they found is that the primary motivation of buyers is to acquire a business at a favorable price. So in fact, buyers are looking for a price concession in exchange for their risk. However, as we saw in the previous slide, buyers are only negotiating a small discount for performing businesses. So in this same Biz Buy Sell survey, buyers were asked what kind of a business they're looking for in a business purchase. And the survey found that buyers' main motivator is to find a business that is mostly unaffected by the pandemic, or one that has even been growing throughout the pandemic. Again, this is evidence that performing businesses are in demand by buyers. In spite of COVID, healthy businesses are selling at healthy multiples. And even businesses that have been impacted by the pandemic are often sellable at a discount. Our firsthand experience is that buyer activity is healthy and the outlook for selling a business is optimistic. So if you're thinking about selling your business in the coming year, let's switch gears now and talk about some specific steps you can take to support your forthcoming exit. All right, so when it comes to preparing your business for sale, there's no limit to the actions you could take to maximize your value of the business. However, I've put together a list of some areas that you should consider. So let's start with financial preparation. One of the most important actions you can take is to get your books in order. For starters, make sure you manage your financials using QuickBooks or a similar software solution. Because when you're ready to sell, one of the first things you'll need to do for your broker is to gather up 3 years of financials, including tax returns, P&L statements, and balance sheets. So make sure you can easily find or generate those documents when the time comes. It's common for small business owners to write off personal items as a business expense, although it should be done in moderation. For example, your business shouldn't be paying for your groceries at home, your home remodeling, or your child care expenses. To the extent you are writing off personal expenses to your business, they should be well documented as well. For example, if you have a business trip on the books and that trip was actually for a family vacation, you'll want to get in the habit of saving and itemizing the receipts from trips like that. Because down the road, during due diligence, a buyer is going to want to see those receipts and to verify that that was actually a personal trip, not a business trip. So another really important consideration is your lease, if you have a lease. And one of the first things you want to make sure you have your lease agreement handy. And you want to also have at the top of your fingers really the knowledge of what the key terms are of your lease. Some of the information that you might want to have handy is the square footage of your space, the monthly rent that you pay, and any triple net or CAM charges. Buyers want to know if utilities are included in the lease. If they are, they want to know which ones. If they're not, then they want to know which utilities you also have to pay for. If there's an annual or an anticipated increase in rent, they're going to want to know when that hits and how much of an increase is coming. The term of the lease, when is the expiration date, and whether the landlord is open to an option to extend. So those are all pieces of information that you should have handy because buyers are going to want to know that. So prior to selling, one of the things you want to do is to consult with your CPA and make sure that they're aware of your plan. Your CPA is a really important advisor in this process. They can help you generate necessary financial documents. And they can also help you model the tax implications of the sale. So keep your eye on the ball. It's important to be aware that selling a business can take 6 to 12 months. And during this time, it's really important to keep your eye on the numbers, because buyers like businesses where the revenues and the profits keep increasing month over month and quarter over quarter. That's not always easy to do during COVID, but it's important to look for ways that you can increase revenue and decrease expenses even after you've made the decision to sell. Don't wait until you're too burned out to keep the business running strong. So, if you think you're ready to sell in a year from now, just make sure in a year from now you've got another year's worth of energy to keep the business going strong. Finally, you might know how much you'd like to get for your business. We've had several small business owners say, yeah, sure, I'll sell if I could get $10 million for my business. And then you look at the numbers and it's a business that's valued at closer to $1 million. So it's important to know that what you're looking for is in line or consistent with the market valuation. And that's where getting a valuation comes into play.
Hey, Jordan, I actually had a question for you. Well, first on your first point on the last slide, if you don't mind, I'm going to go back to that real quick. Getting your books in order as a seller, as a brokerage office, when somebody comes to us, they're ready to get their valuation done. They've got their books ready to go. It could mean the difference between getting a valuation done within 2 to 4 weeks versus 6 months. Because if you have your financials prepared and ready to go, then we can get started right away. But if you don't, we found that it does take and you're busy as business owners, so it takes you time to get those documents. You have other things going on. So if you're really starting to think about selling, prepare as soon as possible. I'll get those financials ready before you come to so that by the time you're ready for evaluation, you're ready. But the question I had was, Jordan, so when you get a valuation done or a broker's opinion of value, is it helpful to do that when it comes to finding a buyer later on who might be using SBA lending to finance the purchase?
Absolutely. If you have a valuation, one of the things that we can do when we start a listing with the seller is we can go to one of many SBA lenders that we work with, and we can get the business pre-qualified. And what that means is we can put that on the listing, on the marketing of the listing, so that buyers know that it is a business that can get SBA funding. When we present the listing to the SBA lender, it's helpful to know that there's a valuation that backs up the figures. So and it makes the process for the SBA lender a lot shorter in order for them to pre-qualify.
Awesome.
All right, so why is evaluation important? Evaluation creates a reasonable selling range for your business. And there's a couple of approaches we can take for evaluation. A broker opinion of value is a document that we at Sunbelt can put together in-house. And for a majority of small businesses with limited complexity, this approach is both sufficient and also affordable. If your business spans multiple industries, if you have multiple locations, or it includes real estate, in a case like that, we can facilitate a certified third-party valuation. And the third-party valuation, the approach is a little more involved there, and the report's a little more detailed. And while it's a little more expensive, that could be the right approach if your business doesn't neatly fall into, say, a well-defined SIC code or a predictable revenue or earnings model. So regardless of the valuation approach, evaluation can help you to discover your company's strengths and weaknesses before you sell. It can also help you maximize the ultimate value of the deal toward the top end of the valuation range. So there's several different methodologies that are used for evaluation. For small businesses, typically the approaches are, number one, industry comparables. And in this approach, we research similar businesses to yours that have sold, and then we calculate average multiples which can be applied to your business then. The second approach is what's called the industry rule of thumb. And in this approach, we take a higher industry look at your business, and we identify value based on generally accepted multiple ranges within your industry. And finally, the income approach is usually, I'd say, the most relevant form of valuation, and one that the buyer looks at most closely. And this is a method where we create a value range looking specifically at your company's performance and your adjusted earnings over 3 years. So, if you have any questions or you'd like to start down a path with evaluation, feel free to contact me or JC, and we'd be happy to talk with you a little more about that service. All right, so moving on, I want to talk for a moment just about COVID in general, because COVID has created significant ramifications as it relates to the sale of your business. Buyers want to understand the impact that COVID has had and will continue to have on your business. So one thing that's important is to take some time and summarize the effect that COVID has had on your business. Think about how much revenue has been lost as a result of COVID. What steps did you take to resurrect revenues to work around the pandemic? A buyer's going to want to understand what challenges you faced, how you've essentially mitigated those challenges, and how long the business can be expected to perform if the pandemic is a long-term reality. Think about the whole stimulus program that has come out in the past few months, and if you've received any stimulus loans. If you've received, let's say, a PPP loan, make sure you understand the requirements to make sure that it's forgivable so you don't have to pay it back. And understand that PPP funds cannot be treated as top-line revenues on your P&L statement. We had a lot of sellers come to us and say, hey, I got $100,000 in PPP money. Can I treat that as revenues? And the answer is no, you can't. It usually shows up on your books as other revenue, but you can't treat it as top-line revenue because it's not earned income, if that makes sense. If you've received an idle loan, be aware that you need to pay off the balance of that loan at or before closing the sale of your business. Your SBA lender might have other requirements as well, so you'll want to check with them to make sure that there's nothing else you need to do if you're going to sell your business while having obtained those loans.
So Jordan, question on that one. So, if you owe money on your PPP loan, not only is it that the current lender that you have or the SBA lender who's financing your buyer is going to have that as a requirement to be paid off, but is it also a requirement for the lender who gave you that PPP loan? Can they prohibit you from selling your business if you haven't paid that back yet?
Yeah, it's our understanding that the answer to that is yes. They can, because when those loans are underwritten, you have to look very carefully because oftentimes there is a clause that talks about the sale or the transfer of ownership of your business and how that might impact the loan. Generally, an idle loan, for example, is a debt on your business. And when it comes time to sell, there's almost always an escrow company involved. And one of the first things the escrow company does before we get to the closing table is they'll do a back check on your business. They'll look for liens, any back taxes owed, and any debts on the business. And all of those things generally need to be free and clear and taken care of before the business can change hands.
Awesome. Thanks, Jordan.
Welcome. All right, so moving on, let's talk a little about emotional readiness. You know, at Sunbelt, we sometimes joke that we have part-time jobs as psychologists or counselors. And it's because people's emotions and their self-worth is really deeply correlated with the business that they own, given the amount of effort, time, and energy they put into their business. And so it's for this reason why I think it's important to take some time out and think about your own emotional readiness to sell your business. You know, for starters, you know, it's good to give some thought to why you're selling. For a lot of people, it's retirement. But some people have been at this long enough where they say, you know, this is just too stressful. I don't want the stress anymore. Or maybe I just don't want as much responsibility. Maybe another business opportunity has come up. It's good to think carefully about why it is you're selling. And because a lot of people are selling to retire, on that note, are you retiring because you want to, or are you doing it because maybe your spouse is encouraging you to do that along with themselves? And those are two very different things. You know, if you want to retire, that's great. If you've got a husband or wife that's pushing you to do that, then, you know, maybe you're not ready to sell after all. So it's good to really think carefully about that. Many entrepreneurs, they define themselves by their work. And so if you're not working, then you have to really think about what you're doing with your time. Do you have any hobbies and interests that you're going to pursue? Are your friends all people that are employees at your company? And if they're all working at your company and you've sold it, the question is, what are you going to do with your time after you sell if you're not going into another venture? It's a healthy exercise to develop a plan if you can't really answer that question. Next, think about handing off the critical work you do every day at your company. Think about handing it off to someone else. How does that feel? Do you feel relieved to hand off that work? Or does it fill you with some kind of regret to picture someone else taking on this critical role in your company? If you have a hard time imagining someone else doing your work, maybe you have unresolved issues that you still need to work through. And finally, are you willing to sell for what the company is worth? Are you going down this path because you really want to sell or not? And I ask that question seriously because we see this all the time. We see sellers who will find a fault or a flaw with every buyer and with every deal because, you know, when you search deep down inside, maybe they're not quite ready to sell. So it's a good exercise if you're just at the beginning stages of this, to think through it carefully and make sure you're actually ready to sell.
Jordan, one of the things I wanted to mention too, or maybe put it in something that you can respond to, you know, when thinking about what you do outside of work or what you're going to do after, we've had sellers sometimes think, hey, I can sell my business and then I'll just go start a similar one or work for a competitor with my experience doing the exact same thing. Do you find that would be surprising for some sellers, given the fact that there might be a non-compete in place?
Yeah, absolutely. And, you know, almost every deal has some semblance of a non-compete involved with it. And so if you sell your business, what's really common is a 5-year non-compete. If it's sort of a local business, usually that's within a 50 or even 100-mile radius. So you can't necessarily just sell your business and continue exactly what you were doing. Now, those things are always negotiable. And so there might be some way to carve out some smaller section of what you were doing, so long as you're not directly competing with the buyer who's purchased your business. But it's a good point. It's really something to think about. All right, so let's move on and talk a little about some operational considerations. one thing that's really important is to think about is that the owner usually plays such an important role in day-to-day operations. And for this reason, I'd like to challenge everyone here who's thinking about selling your business to take a 1-month vacation. Seriously, I give you my permission. And the reason I ask you to take a break is to make sure that your business can operate while you're away. Because buyers really love businesses where the owner is not instrumental to the effective operation of the business. Understand the reasons why you need to be involved in each and every decision and work actively toward working yourself out of a day job, so to speak. Buyers look for absentee-run businesses where the business can be profitable even when the owner is not directly involved in the day-to-day operations. Once a business is listed for sale, you want to keep the business running steadily, but try not to make any major changes. If you're going to transition from a brick and mortar business into being a pure online business, don't do that after you've listed the business for sale, because buyers are leery of any changes where they can't yet see the result of those changes. So if you're going to make any major significant changes to your business, maybe think about doing that now before you list the business for sale. And that way, by the time it's listed, maybe a quarter has gone by where we can show a buyer the result of those changes. So the biggest strength of most businesses is the people who work there. And so if you have key employees who've been there for years, they put their heart into their work, hang on to those people, because losing key employees is both disruptive to your business, but it can also scare away a potential buyer. So do everything in your power to keep your people happy and engaged in their job. So earlier we talked about organizing your P&Ls and tax returns and balance sheets, but those aren't the only documents you need to organize. Think about whether you have things like an employee manual, that you have a vendor database, a customer database, maybe you filed for trademarks or patents. During due diligence, a buyer is going to want to review all of those operational documents. So it's a good practice, a good habit to start a list of important documents and organize them so they're available when the time comes. So next, let's talk a little about digital preparation or digital transformation. This is really useful to discuss, especially since we're here in Silicon Valley. It's surprising to see that we still meet sellers every day and they operate successful businesses without even having a website and sometimes without any social media presence. While at the same time, increasingly, we see younger people, Gen Z and millennial buyers looking to purchase a small business. And especially here in this area, these young buyers are oriented around technology, social media, and mobile apps. And while you may not need to develop an app for your business, there are some steps you can take, small steps, to enhance your digital footprint. So for starters, the first impression a business might have of your business is probably going to come from your website. And it's not hard or expensive to have a modern style website. You could even build one yourself using simple point solutions like Wix or Squarespace. The trend in websites today is to create spacious design, scrolling pages, larger homepage images, and a responsive design. Sites like these are visually appealing, and they also usually adhere to Google guidelines, so you want to make sure that your site can be found and ranked in Google search. Secondly, it's really important to have some sort of an ongoing content strategy, and the easiest way to do that is with a weekly blog. Here at Sunbelt, each of our agents contribute to our blog every week. We take turns writing articles. You might want to consider doing the same thing with your own staff. And in the content that you or your staff is writing, you want to make sure to use keywords that you'd like to optimize, because the words that you're using in your blog help in search and SEO to bring people effectively to your website. If you're not sure what keywords to target, Google has a keyword planning tool, and it can help you to identify the important keywords that you want to optimize in your content. Next, it's good to think about engaging customers actively when they're on your website. And one way to do that is to allow some semblance of online ordering. And online ordering is a big topic because, you know, if you sell a service, it's not like you're going to order a widget online like it's an Amazon product. But there could be simple ways to engage a customer with the new order process. For example, if you're a locksmith, you might want to allow a customer to initiate a new order with a simple web form. And at least you're now collecting the fact that who the customer is, what they're looking for, what their name and their address is. And then you could call them back and continue the order process from there. So even if it's just a way to initial the first step in a new order, what we find is that customers increasingly like the ability to click some sort of a buy button on your website, regardless of whether it's a product or service. Another thing that's newer, well, it's been around for a while, but you know, it seems to be happening a lot more on websites, and that is to consider adding a live chat capability directly on your website. It's like having a salesperson built into your website. And there's a lot of companies out there that offer this service that you could integrate into your site. One company called Intercom provides some free trials that let you integrate that capability to your site. Obviously, today we're on a Zoom meeting. If you're not already using Zoom or some other online meeting tool, it's a great way to keep FaceTime with customers, especially during the pandemic. So buyers are really interested in operations and processes. And it's great to show them that your business is run on modern, streamlined tools. CRM systems help you manage sales and contacts. Email marketing can help you stay in contact with customers and prospects. If you're not using it, Google Apps is a great free way to collaborate with documents and spreadsheets, both with your employees and also with your customers. Dropbox can help you manage your internal network sharing with your employees. And then there's also a number of industry-specific solutions that are web services that can help you manage and streamline your business, which can be both inexpensive yet transformative.
Hey, Jordan, I just want to make a point. As a guy who has developed websites myself, and I maintain our website's content, I want to encourage everybody, every seller, not to overthink the points that Jordan just made. A lot of these services make it extremely easy to build a website and to incorporate some of the tools that Jordan's talking about. Almost like you would add an app to your phone, you can add these additional services like live chat to your website just by installing it. They're sometimes cost, but they're very minimal. But I, again, want to encourage you to know websites have been around for a very long time, and the way that you can put these things together, these website building companies really have it together to make it super simple for you. So I do encourage you to follow those directions. Absolutely.
Thanks, JC. So finally, the last item I wanted to talk about today is the actual physical appearance of your business. Because when a buyer is interested in your business, of course, they might look at your website before they even get there. So that's why digital transformation is important. But at some point in the process, they're going to want to see your physical space. And we get so wrapped up often with thinking about the financials and the numbers that we don't think of a business sale synonymously with a home sale. Yet in some ways, selling a business is like selling a home if you've got a physical location. And first impressions do matter. So just like home buyers are willing to pay more for a move-in ready, remodeled home with modern design, the same is true for business buyers. So, if you're a service business, consider the work environment for your team. The work environment contributes to company culture, and a buyer will pick up on that when they come. So think about how much chaos is visible to the naked eye in your office. A chaotic office could give buyers the impression that your operations are also messy. So it's not too difficult. You can organize your workspaces, and there's a double benefit there. You can satisfy your employees while also making a great first impression on your buyers. For retail businesses, think about what simple changes you can make to add a more modern appeal with clean lines. And you may not need to hire a contractor for a comprehensive makeover, but it could be as easy as hanging a few new pictures or maybe painting one wall with an accent color. So with that, I'd like to thank each of you for joining this morning and spending some time before a long holiday weekend. I'd like to turn the presentation back over to JC for Q&A and wrap up.
All right, excellent. Thank you so much, Jordan. And we went a little bit over on the presentation because we did have some technical difficulties in the beginning, but we've got about 5 minutes. So please, if you have questions, now's a great time to ask. Jordan, we did get one question, and that question is, how have you at Sunbelt modified your buyer outreach and search process for your seller clients during COVID? Does the sales process take longer, and are qualified and motivated buyers less prevalent? So I think
that's a good, no,
oh,
go ahead. Go ahead, JC.
I think I can maybe answer the first part of that. So we've seen throughout the entire year that buyer interest really hasn't gone away. Within our office, we really haven't seen the need to change the way that we market to buyers. I do think that there was a lot of hesitation. Just like any investor, you're going to see what happens to the market before you put your money into it, right? So that's kind of part of the process of this year was, we can come up with ideas and plans as much as we want, but there's always that wait and see part. And I think that's what we were seeing. And on our websites, we can track how many people look at our listings, and the number hasn't changed at all. As a matter of fact, especially more recently, it's gone up for most of our listings. But during the entire year, I can say that the traffic never ended in terms of buyer interest of our listings. Sales process taking longer, maybe Jordan, that's where you can speak to that.
Yeah, no, I would not say that the sales process is taking longer because, I'm finding in my own listings, there's more interest in the listings I have as long as those listings are generating some revenue. I mean, if the business is completely shut down, that's a different kind of a problem. But there's a lot of buyer activity out there now. So I'm not finding that it's necessarily taking any longer time in order to get through the sales process.
Okay, I'll add some to the first part of the question. So maybe because, traditionally this office has been doing more than I think other brokerage offices. In addition to just the list the business for sale on multiple websites, we do a lot of other offline searches for the seller. So for example, we do industry search. We find buyers in vertical industry for the target business. We also reach out to potential buyers through social media like LinkedIn. So we do all these searches confidentially. And this is not just something we started after COVID-19. We have been doing that throughout our practice. So, but I don't think every brokerage office out there is doing that kind of a service for our customers or for their customers. So that's why I want to make clear, we're not just passively listing the business for sale on the website, then leave that to the market to respond. We actively actually search out to the potential buyers, they may not pay attention.
Okay, excellent.
Yeah, and Helen, just to add on a little bit to that, I just wanted to mention that we also have some benefit of being the largest business brokerage firm in the world with over 100
Right.
offices worldwide. And so there is some benefit we get in terms of reach. There's a national database of buyers within our own network that we could tap into that other brokers don't have. And given our breadth and our scope, there's a lot of larger buyers, private equity groups and so forth for larger business sales that are deeply in touch with us, and we have access to across multiple industries to private equity groups who might also be a worthy candidate as buyers. So we have access to look for buyers in many different ways.
Okay.
Right.
So the time for the webinar is over. If you can stick around, we do have one more question. If not, this webinar is recorded and will be sent to you via email along with the PowerPoint presentation. So I do want to thank you for joining us if you have to leave. If not, Jordan, we do have one more question. If a business was profitable and growing for the 2 years prior to COVID, but will be smaller and unprofitable for 2020, how does one still get a reasonable valuation in the current environment?
Hey, JC, can you repeat the question? You were kind of breaking up there when you spoke.
Sure. If a business was profitable and growing for 2 years prior to COVID, but will be smaller and unprofitable for 2020, how does one still get a reasonable valuation in the current environment?
Okay. Yeah, you were so breaking up, but I think I caught the gist of it. So you've got a business that's profitable before COVID, and then COVID happens, and now there's a decrease. And how do you look at that? There's this is still an evolving area, and there's a lot of different ways to look at it. If you look back to the 2009 economic downturn, what happened about a year to 2 years later is that buyers looked at the 2009 period and they weren't concerned by it, because they said, what happened in 2009 was an anomaly. It wasn't a normal course of business. And so they were willing to overlook essentially the financial impact of that on the valuation of that business. I firmly believe that, as we start, hopefully coming out of the pandemic and there's a light at the end of the tunnel, I think that there will be an ability to some degree, discount or maybe even completely eliminate the time period of reporting on evaluation as a result of this being a pandemic that affected every business and every person in the world. In other cases, what we're doing where we know that there's an upcoming rebound of a given company and they want to sell, is that we will replace the current period with a forecast of what the next 12 months look like. And in doing so, of course, you still need to present to the buyer what the actual numbers were during the COVID period, but you don't necessarily have to base the valuation on that if there's a recovery that you can point to factually.
Excellent.
I think we still have we still have a few minutes, right? We run this to 12, right?
Yeah, that's correct. Yeah, I'm just looking at the timer here on the presentation, but yeah, according to the clock, yeah, we have a few more minutes. I wanted to add to that point. I mean, just like you folks who are joining us for this webinar, we also watch webinars. And in one of the webinars I watched recently, after this is all over, after COVID, or as things progress to the new normal or whatever it will be, you will have these businesses that have survived and are profitable will have operations in place to be able to manage their business during a time like this in the future. So it almost becomes disaster proof in a way, because they're going to have now new operations in place. And though that may not increase the monetary value of your business to a buyer, it's definitely going to be something that's going to bring value for the or give value to the operations of the business in the eyes of the buyer. So it's something that is going to make businesses that much stronger and less of a risk for buyers in the future.
So in the same line of question, maybe Jordan, you can share some of your insights, like if the business is negatively impacted by COVID-19, should the owner sell now or should they wait? What's your insight on that?
Yeah, I think the answer, not to be evasive, but I think it depends. If you've got a business and you have been impacted by the virus, the question I would ask is, to what degree have you been impacted? If you're closed down and your revenues went from 100% to 0%, that's one thing. That may be a difficult situation. If your revenue has dropped by 25%, that's a whole different situation. I think that's more understandable. And so I think in a case where you've had some reasonable drop off in revenue, I think it's fine to continue to move forward to sell your business in the short term. Also, if your business has been severely impacted revenue-wise, I think the time you can start considering to sell again is when there's at least some glimmer of light at the end of the tunnel. And what I mean by that is, once you start reopening and the revenue starts to grow again, and you could show that you've got month-over-month growth in revenue, and it's starting to climb back to where revenues used to be, I think there's a story then that you can tell about recovery. But if you've closed your business and there's no sign of when you're going to reopen it again, it's not necessarily unsellable. You should still come and talk with us because we can explore it. But I think in a lot of cases, if you're closed with no options of reopening at any point in the near future, generally that's a harder situation.
Yes, I totally agree. Unfortunately, some business, they are from 100% revenue to zero now. So those
Absolutely.
are the toughest ones. Mm-hmm.
Yeah, those are tough situations.
Mm-hmm.
And encourage everybody, buyers and sellers, to open up our newsletters when they get sent to you, especially now during the COVID-19 era, because our agents, as Jordan mentioned earlier, we do write blogs every week, and we are going to be starting to send out newsletters on a monthly basis. And a lot of those articles are going to be talking about some of these tips and things to know about, what the market's like, what your specific industry may be like, or what resources are available, or what's going on, answering more of your questions as time goes on during this COVID-19 era.
Yeah, as we mentioned earlier, so we want to present the topics that are interested to you. So if any of people in the audience, you have any specific topic you want us to cover, feel free to email us, or just write in the comments down below. Then we'll find the right people to cover those topics for you.
All right.
So go ahead.
I was going to say, it looks like those are all the questions that we have, and our time really is up now. And I just want to thank Jordan for a fantastic presentation. And this is our team. This is part of our team here, folks, and we all work together this cohesively and always talk about these types of things. So I do want to thank everybody for joining us. And again, the webinar, link to the webinar recording plus the PowerPoint presentation will be sent to everybody that registered for this presentation. Thanks for joining us.
Yeah, thank you, Jordan. Thank you, JC.
Thanks, everyone.
All right.
Thank you.
Bye-bye.
Bye-bye.